Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 4th of March, 2021. So, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, guys, jumping into the charts. Now the first one I want to pick up here is Nikkei 225. Of course, yesterday's risk-off environment, which kind of spilled over in the U.S. session, and initially in the European session, but then in the US session, and we managed to break this upside line here drawn from the low the 3rd of October, and also we've managed to drop below this 28,930 territory that I kept talking about. As I said before, that this is my that little area of support which I would like to see being broken in order to get a little bit more excited with the downside. Well, I mean, we actually got that, and well, now we're going to take it very carefully. Now it increases the chances here for a further decline, and well, my next target here will be this 28,326 zone. So keep your eyes on that one. It could be quite interesting, and basically as long as it stays below this area or below this upside line, then there is a good chance for the index to drift lower. Now, don't get me wrong, what could happen here as well, and we've seen something like this happening many times, where, for example, it could drift lower a little bit, but then it could rebound and move back up. But this is why we have this other downside line here drawn from the high of the 16th of February, and in a way we could see this index kind of basically drifting lower, testing maybe the area somewhere around here, and then rebounding and pushing back all the way towards this downside line. This is where a lot of buyers could get excited again and start jumping in. But if we fail to break and stay above this downside line here, then yes, another slide could be possible. So don't get caught out in something like this. Keep that in mind. I'm not saying that this is how it's gonna work out, but again, something similar we did see previously, so let's be very careful here. For now, I'm leaning a little bit more towards the downside, and my next target is the 28,325 territory right here. So let's keep an eye on that one. Shanghai Composite. So the index drifted lower, closed lower as well, slightly above 2% in negative territory, yes. However, it still remains above this upside line. So, but this is where I'm going to take a bit of a careful approach here, and well, I'm going to stick to my levels that I talked about yesterday, if you remember. Basically, the idea was that given that we had a push higher here and we had a nice daily close above this area of this 3,568 territory, I said that I'm leaning a little bit more towards the upside. Well, the logical side was, well, that was kind of logical. The only thing is that we saw the European and then U.S. markets selling off, so that kind of dragged the Asian session here to the downside as well. So yeah, a bit of a problematic situation here, I would say. The only thing is that for the downside, well, of course, this increases now the chances that there could be a break of this upside line, or should I say, we could see the daily candle staying below this upside line. but I would prefer to wait maybe for a drop below the 3,446 territory right here, which is the low of the 29th of January, and then go for some lower areas, because at the same time the index would be placed below the 100-day EMA, and then yep, we could take it from there. If you want to go, let's say lower, or let's say you want to look for some opportunities earlier, well, yes, of course, keep your eyes on this upside line, and if that gets broken, then yes, of course, this increases the chances, but still have a very tight stop loss just in case this suddenly reverses back up here. Now, the German index, DAX, and yeah, I mean, this one drifted lower yesterday, but managed to remain above this downside line. So in a way that kind of creates, or should I say, that doesn't create, but keeps a bit of positivity, or should I say, it could keep a little bit of positivity, because, well, I mean, the cash index, the futures market, kind of did move to the downside later on, and together with the US session, and basically the German index right now is trading below that psychological 14,000 mark. So it's trading now below this downside line as well. So I mean, it is kind of all leads to a potential move lower. However, that said, if you remember yesterday when I covered the German index, I said that even if it drifts back below this, but let's say remains above the 21-day EMA here shown as the yellow line, then, well, I mean, there is a bit of hope for the bulls still, but yep, that kind of hope diminishes slowly, unless the index climbs back above this downside line here and starts pushing maybe somewhere above this 14,131 zone. In terms of the downside, well, I would prefer to wait for at least for a drop below the 13,830 zone right here, and then go for, or should I say, aim for some slightly lower areas. Now, I'll pick up on the Dow Jones Industrial Average here. I mean, yesterday there was a request, so I'll pick up on this one today. In the morning video, normally I do it in the afternoon sessions, but yeah. The Dow Jones Industrial Average, of course, you can see that it drifted lower, closed slightly in the red, but it kind of, yeah, continued to slide further. And if we take a look at the cash index right now, we'll see that the price is balancing somewhere around the 31,230 mark. So it's not far from where it closed. On the positive note, that it still remains above this upside line drawn from the low of the 12th of November. If you want to go for some lower areas, well, I mean, preferably a drop below this upside line, and then maybe a drop below last week's low here near the 30,911 could do the trick for more sellers. So yeah, this would confirm a forthcoming lower low then, and more sellers could join in. So if you want to look at some lower areas, well, first of all, wait for a break of this upside line, and second, wait for a confirmation break here below the low of last week near the 30,911 territory. For the upside, if you want to be careful, well, a push above the 31,643 territory might do the trick for more buyers. But again, I do understand that maybe we could be missing out here on a bit of room, but what I don't want to kind of end up having here is maybe just something, just kind of some false breakouts, and basically kind of, yeah, a lot of people could get caught out on this. So, and to be honest, the market situation right now is a little bit tricky, and it's unstable, and it's, I would say, unclear for the short run here right now. So yeah, I mean, just be a little bit more careful, guys. Wait for those confirmation breaks. Now jumping into another index, and that's the dollar index, and yesterday it reversed back to the upside after coming close to testing the 21-day EMA. But again, it failed to move above this 91.05 territory. Although this morning we saw a slight push here above this level, still the daily candle kind of is still struggling to kind of have a better move here. above this, and the price is struggling to have a better move above this area. So that's why for now I'm gonna be very careful, very cautious, and I need that push. I need that daily candle staying above the 91.05 because I don't want to get another false breakout here like we had here on Tuesday. So yeah, let's be very careful. For the downside, you could start looking at some lower areas if we, for example, get a drop below the 21-day EMA here. At the same time, keep your eyes on yesterday's low near the 90.63 zone. A nice drop below this will confirm a forthcoming lower low. Jumping into gold very quickly. So we managed to reach this 17.04 level. I talked a lot about this. I talked about this level on Monday as well. After we saw this nice correction to the upside, what I said then was that wait for it, because if this area provides good resistance, then yep, another slide here could be possible, and my target was this 1704. So we managed to reach that yesterday. On Tuesday we came close to reaching that level, but didn't really quite let's say move didn't really quite move further, but here on Wednesday, yesterday, we did finally reach that. We got a stronger hit. Today we're seeing a bit of a corrective move here higher, but yeah, for now, I mean, the idea here that I mentioned to you yesterday, guys, that we might see a rebound, a small rebound from the 1704, but if it's going to be short-lived, and let's say, for example, if the price this week struggles to get back above the 1740, 41 zones, roughly around here, well, I mean, we could see another slide, another move lower towards maybe the 1670 territory, because that's my next target. That's the lowest point of June of last year, and not far from this upside line drawn from the roughly from the let me just grab this one up. There we go. Roughly from the 20th of May 2019, guys. So again, this whole move right now could still be seen as a temporary one because, well, I mean, because we are still trading above the some of these upside lines. So, but in the short run, there is a bit of possibility for this one to move lower. Bitcoin Cash. So a quick update. I'm not going to spend too much time on this one because I did mention Bitcoin Cash recently, but basically the idea still remains the same. I need to see a nice good push above this 553 territory in order, and I would like to see a daily candle staying above it because as well, I mean, I don't want to get a false breakout here. If we do get that, then yes, we will go for some higher areas because at the same time we'll have the daily candle kind of remaining above the 21-day EMA, and maybe more buyers could see this as a good opportunity to step in. However, if this reverses back down here and breaks the upside line here drawn from the low of the 23rd of December, if it breaks then the 432 territory marked by the lowest point of February, now that's where it could become very interesting for more sellers. Of course, initially then we'll target the 200-day EMA, but slightly below that we do have the lowest point of January here. Actually, let me just double check. No, that's not, sorry, that's not the lowest point of January. That's the low of the 27th of January of this year. And that level is around the 369.50 mark. So, and then, yep, we'll take it from there. Aud Usd. So, a battle for the 0.7820 zone, or should I say battle for breaking that, is still ongoing. Yesterday we saw a reversal and from that level, so basically kind of confirming just how important this level is. Yes, we did have this week a few overshoots here, but we didn't really get that daily candle staying. So let's see if we have another attempt here to break above this area. For now, I'm going to take a bit of a neutral approach, to be honest, because well, I mean, it's not really clear here. I mean, yes, we are still on an uptrend. We are still kind of yes, still near this 0.7820 zone, but again, we need that daily candle staying above it in order to go for some higher levels. And for the downside, well, I'm gonna keep an eye on this upside line, of course, but mainly I will watch out for this 0.7692 territory right here, and then I will go for let's say lower areas. But at the moment, I'm kind of examining the upside scenario, so let's see if that's going to work out. I can see in the chat room here, Kirsten. Good morning to you too. I'm hoping you're having a wonderful start of the day. So, yeah. Good morning to you. Now, jumping into USD Cad here. This one is a little bit of a tricky one here because it keeps flirting with this downside line, and this downside line is drawn from the high of the 19th of March of last year. And well, I mean, almost for 1 year, we have been kind of drifting kind of lower here, trading below this downside line. So maybe at some point we could see this upside line getting broken, and not in a way like we had here last week, because then you can see, I mean, you can see that we had a break here, but then the next day kind of quickly reversed back down. That's why I had my scenario, and this is what I mentioned previously, I had my scenario, upside scenario from the 1.2764 territory here. And that's from where kind of, in order to get a little bit more excited with the upside, that's from where I need to see kind of this this break, and then yep, we could go for some higher levels. But long story short, with USD Cad, yes, last week we had a break here, we had a daily candle staying above it, but if we look at the weekly candle, well, we basically just was kind of seen as a bit of a kind of false breakout here. So yeah, so basically it didn't really quite let's say go where it had to go, but it remained below it. But nevertheless, don't get me wrong, it is going to be an interesting week this week. Now, in terms of the economic data, basically, and let me just quickly take a look on that. But the main focus will be, of course, for tomorrow, and that's NFPs. We have some data from Canada as well. So, yep, guys. I mean, so basically, from the U.S. on Friday we have the non-farm payrolls, and from Canada we do have the well, actually, we do have the IV PMI. So it's not the employment figures, but it's the IV PMI numbers. So yes, of course, the Canadian dollar is the one to watch this week, especially on Friday. Today we don't have much on the agenda for the Canadian dollar, but for the US dollar we have the initial jobless claims. So keep your eyes on those, but those are expected to have risen, and if so, then maybe that's not going to work out well for the US dollar. However, if you can see here, if you can see, DXY is kind of preparing, or should I say, it seems to be preparing for a possible move higher. But if it does that, then yes, we could see maybe USD CAD pushing higher, especially if also oil pushes a little bit higher as well. So I mean, yeah, I mean, there's a lot to focus on, because if oil pushes if oil pushes lower, then yep, that could put some pressure on the Canadian dollar, and if basically a combination of a stronger US dollar and the oil moving to the downside, and weakening Canadian dollar, we could see a nice good pop here to the upside. But again, that's a ideal scenario. That's the kind of according to the books. But let's keep an eye. Sometimes the market doesn't really do everything according to the books. Gbp USD. Now, GBP USD, today we don't have, we have the construction PMIs for to keep an eye on for today in UK. Construction PMIs from UK, those are expected to have improved, and yeah, I mean, those are expected to have risen into kind of went into basically the sorry, can't find the expansionary territory. There we go. So they have the expectation is for them to jump back into expansionary territory from 49.2 to 51. So if that's the case, then maybe we could see the pound maybe accelerating a little bit further north, and of course the situation in UK surrounding the whole kind of the vaccine issue. If we see positive headlines then coming out from that side, then, well, I mean, we could see GBP USD pushing to the upside here. However, after we had this nice decline here last week, basically the pair is now kind of stuck near this 21-day EMA, and for now we can see that the pair is kind of consolidating here a little bit, and that's why I'm going to be a little bit more on the careful side with GBP USD here, especially if I see DXY popping higher. Now, maybe this could be seen somewhat of a possible bearish flag. Again, it's not an ideal one, but just to keep in mind. However, if I see a drop below the 1.3888 zone here, at the same time this will drop below the 21-day EMA, and maybe more sellers could join in. So again, keep that in mind. And for the kind of past, let's say, 2 sessions, we were kind of getting a little bit squeezed here. So I mean, let's see which way this is going to pop. And finally, EURUSD. So this one is a tricky one still, because I'm still keeping an eye on this 1.2023 zone. I need that break. I need that daily candle staying below it, because at the same time the pair would be placed below the 100-day EMA again, and maybe more sellers could join in. Then of course my target will be the lowest point of February near the 1.1952, or even below that. But again, for now, at this point in time, guys, be very careful with this one. And for the upside, well, you could look at the yesterday's high near the 1.2113, but still be very, don't get me wrong, I mean, it could travel higher, it could find resistance then near this 1.2190 zone and then reverse back down. So that's why I have my upside scenario here from this 1.2190 territory. And then, yep, we'll take it from there. For now, like I said, it is a little bit tricky. Keeping an eye on some of these levels, and let's wait and see which one gets broken first. So guys, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time joining in here. So yep, I hope you'll have a wonderful trading day today. Stay safe, guys. Have your stop losses in place and everything will be fine. Thank you very much, and bye-bye.